following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Dell in Texas. Hey, Dell, what's going on?
Hey, Tom.
How you doing, man?
My call. Great.
Thanks for calling. Thanks for holding. Appreciate it.
I love your show. I just stumbled upon it probably, maybe a month ago.
And how'd you find us?
I found you on YouTube.
YouTube. That's a beautiful thing. Well, we appreciate you growling and prowling with us. Welcome to the Tiger family, man.
Wow.
I like it. Totally.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's a TGIF, folks. Let's make it a great one. Expect the best. Believe something is good is going to happen, and it usually will. Unknown author. Market-wise, let's take a look at it out here. We have the Dow Industrials up 77, Nasdaq up 16, S&P's up 8, gold contract trading up $19 at $1,291 an ounce, silver up 16 cents, $17.49 an ounce, platinum up $16 at $1,078 an ounce, copper flat at $2.14 a pound, light sweet crude up 24 cents, $44.56 a barrel, bonds. You have the 10-year note down 7 ticks, 130.16. 30-year bond down 12 ticks, 165.01. The notes and the bonds failed on price, failed on volume. A lot of action out here today, folks, big time. King dollar up 60 ticks, trading out at 93.84. The euro is flat at $1.14, and the yen is trading at 107.14. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? Okay, so check it out. Jobs numbers come out. Market goes south. Market bounces, and has lighter volume. So what do we have? Cash, well, S&P, the SPY first. SPY's got a low of 203, rejected the lower price, is trading right now at $205.65. And what that does, that gets it back inside the downdraft that was created out here on the 29th, and that's saying, okay, we're going to have a little bounce. This bounce can bring us to probably 206.69, and this is probably just setting up a larger ABC down. What we've done from the top here is this. We haven't done an ABC down yet. Each time, if we go back to the top of the 20th of April, 3 days we came down, and you had big volume down at 207, which was on the 22nd. You bounced on lighter volume. We had big volume again on the 29th. These are last two lows. Bounced again. Bottom line, that's what you were doing. As you go higher, we'll see what kind of buyers we have at the $206.96. The NDX 100, the 3Qs, same type of setup in the NDX. NDX gets to a price point today of $104.04. Same setup, too, by the way, meaning that you come off the high. We come off the high of the 19th of April. You come down hard. You make the first low at $108. You bounce. We make that low with 39 million shares. You bounce with 19 million. Bang, you make a next low at $104, you do 67 million, you bounce with 24 million. We got 24 million now, but you need a lot more than that to get the lower price. So right now we're at $105.45. You're inside that bar from the last downdraft. That says you can probably bounce somewhere up to the 106.07. Nothing heavy, but bottom line, it looks like it's going to try to set up a B to a C of an ABC structure on the way down. Gold contract. What do we have with gold? Gold wants higher price. What's really wild here about gold, folks, is this. Here, let's go through it first, and I'm going to show you something, because this is showing how strong gold actually is. So, gold contract out here right now has done 242,000 contracts. That's a monster. That's a monster, folks, okay? We're at 1292. This is an ABC, it's already an ABC structure up on the way to 1442. When it broke the B point, with volume on the 29th of April. So bottom line, gold wants higher price. What I want to show you is this. Intraday, what we had is this. when the jobs numbers come out, gold first spiked down to a price point of $12.76, took off like a bat up to the $12.97. As that was doing it, now let's go back over to the dollar for a second, because this is the phenomena which is a trip. So if we go back over to the dollar, what happened with the dollar is that when the jobs number come out, dollar did go down, went down 500 ticks and came right back. So what we have out here today is that you have gold at a higher price. Now the dollar's weak, it hasn't done anything, okay, it's flat, but the bottom line is that first it went down 500 ticks, then it came all the way flat, and it still couldn't hit the gold market. That is saying the dollar wants lower price, the gold market wants higher price. We take a look at where the dollar index is trading right now. We're at 93.85. Now, a close over the 93.72 would say that, hey, guess what? That dollar can go higher next week. The volume's light. You know, yesterday it failed on price and volume. We closed at the 93.17. So you closed under the 93.70. Yes, 93.72. So right now we're over it slightly. We'll see if that's going to hold. Now, bonds also. This is wild what's going on with bonds. So check it out. Inside the bond market, what we have is this. The 10-year note, when the jobs number come out, the jobs number was light, 160,000. When that number come out, bonds, the 10-year note goes from 130.25 up to 131.06. It's a big number. Stays up there for about a split second and then just comes right back down. Now, with that saying, and technically the way this is set up, this is pretty cool because it was trying to test for 8 days the downdraft that had been out there in the notes and the bonds from April 20th. The high of that is $130.19. Well, we get to 131.06, and guess what? We're at 130.17. Bottom line, can't handle it, okay? So what does that set up? That's setting up that the notes, now let's go to the bonds. If we go over to the bonds and we take a look at the bonds, what you're going to see, both the notes and the bonds, okay, got over that level, are under that level right now. That is a failure on the bonds on price and volume. On the notes, it's only on price because we did have volume on the notes. On the bonds, we didn't. What does that set up? And on the bond, well, on the bonds for sure, is a run down into, well, nothing's for sure, but down to, probability-wise, down to the 160.31 mark. So the market itself wants to raise rates regardless of what the Federal Reserve wants to do. Silver, let's go take a look at the silver contract. What we have with silver is this. Silver's trading at a price point of $17.51, up $18. We've done 51,000 contracts. That's big numbers at highs. The XAU, the HUI, all these weekly setups are going to be dynamite, folks. The XAU right now is up $3.80. You're at $88.94. You put this on a weekly and you're going to see you're at the highs. You have high volume, in between huge volatility, no doubt. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming right back. And you can expect, a volatile market as we come into the close. And I expect we're actually going to get more selling into the close. But we'll still get a bounce probably next week. But we're going to get some selling into this close. Coming right back, folks. You stay right there.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials right now are up 68. You get the NASDAQ up 12. S&Ps are up 7. And, check this story out, folks. This is pretty heavy. We've heard plenty of stories, the last 10 years that you have states that aren't going to be able to pay their pensions out. What we have had is that we've had plenty of individual companies that have gone BK, and what ends up happening there is that the feds come in and pay a certain amount of that when you're in a certain fund. But check this out. This is pretty heavy. So the same thing would happen here, but listen to this. So United States federal mediator Kenneth Feinberg, and Feinberg's the one. He's one of he is the largest mediator out there. He was the one that did the 9/11 deal. I believe he just finished another deal, but he did. I think he did the. He did one other one. He just finished. But check this out. This is pretty intense. So rejected. Okay, so this just got done today. Federal mediator Kenneth Feinberg rejected the Central States Pension Funds Rescue Plan that would have cut benefits for more than 250,000 working and retired union members. Feinberg's decision upholds retirement obligations to members of the International Brotherhood of Teamsters. About this affected 2/3 of the 400,000 members would have had their pension checks cut under the rescue plan, some by 50% or more. But this is the kicker. Wait to hear this. This is what's really wild. So, of course, you don't want anyone to. You've been working. Not only want your pension, you need your pension, right? Okay. Central States is one of the biggest multi-employer pension funds. It pays out more than $2.8 billion in benefits a year. The decision could dim chances for multi-employee pension funds to avoid insolvency by slashing benefits. Central States projects that, without the cuts, Central States projects that, without the cuts, it would be out of funds by 2026 because it's currently paying out $3.46 for every dollar it takes in. Even under the plan, the fund gave itself a coin flip chance of surviving past 2064, according to the proposal. That specific plan submitted pursuant to Klein Miller is flawed, said Feinberg. The Treasury Department's special master for implementation of Klein Miller multi-employee pension fund reform. He said that Treasury is reviewing other rescue plans submitted by other pension funds. The Central States Plan relied on flawed investment and actuarial assumptions and failed to show that it would save the fund, Feinberg said. It didn't make equitable cuts and wasn't deemed to be relatively understandable for the average plan participant. Okay, so what he does, folks, is this. This is what's pretty cool, but is really dangerous for all of us, okay? He decided that, no, everyone's going to get their proposals. And the reason is that he's saying that, guess what? What you submitted, you're going out of business anyway. He says, so guess what? The people that are there are going to get it. Afterwards, who knows what's going to happen? That's pretty intense. That's a big number, folks. That is a big number. And I'm not sure what the law is behind it. But bottom line, big deal. Okay, let's go over and we take a look at the HUI. So HUI out here, this is what we have with the Gold Bugs Index. That's up $9.95. You're at 226 right now. And what you're going to see when you do your work over the weekend, folks, when you put these on a weekly basis, they're lined up, and they're lined up in a way that they just want to go topside, man. I mean, it's pretty intense. We bring this back, you put this back, what you're going to see is that you are into the supply line. And this supply line, folks, is a very large supply line that it's been eating through. The supply line I'm talking about in the XAU and the HUI started on June of 2013. The bottom of that supply line is 206. The top of that supply line is 261. We're at 226. And it's eaten into it fast and furious. And it has the juice behind the move. The reason this supply line is so important is this. You take out this supply line, and, you know, realistically, it's 280 to get over it. You get over that level, man, this thing can blast because we came down so quick. In 2011, this was trading at $524. And the first leg down, which is a straight leg down, it just went $524 straight down to 263. Bottom line, it's working just the opposite way now. And as I've said a few times this week, what you do have is that you have the accumulation inside the XAU, inside the HUI. It's one of these deals, the chicken and the egg, when you're dealing with ETF structures and you're dealing with individual equities. Because you got to remember something. What we've been talking about is that we've been talking about the aspect that the gold future goes up, and as the gold future goes up, what ends up happening? Well, the GLD, the sponsor of the Street Tracks Trust, has to buy more physical gold. They bought the most amount of gold since 2011, last Monday. They bought 20 metric tons, not 20 million metric tons, 20 metric tons. That is a monster, folks, okay? So when you talk about the aspect of the XAU and the HUI, what happens is that it's the same type of phenomena. What ends up happening is that, and the GDX. So watch how this happens. I'll bring you through this. This is a trip. So, and the GDX, okay? So, and the JGDX, okay? So watch what happens. Is that if we do it the GDX first, inside the GDX, you got Barrick Gold is 9%, Newmont 7%, Gold Corp 6%, Franco-Nevada's 5%. Well, each and every time one of these go up, what do you think ends up happening? The GDX has to buy more of Barrick, Newmont, all of the above, to keep the net asset value of the ETF structure. When you go into the JDGX, and if you go into the juniors, what ends up happening is the exact same deal. Meaning, if you're wondering why some of these are getting so much juice, that is the corresponding trend as you're going up. You know, the ETF structures are great when you're going up. They're a disaster when you're going down, because when you're going down, just the absolute opposite happens, as they have to push equities out of the way. If we go inside the NDX, we look at the strength versus the weakness. Endo is a disaster. Endo International, this has been a disaster for a long period of time. It's got cut about 40% today. It gapped down $10. It's trading at $15. If you want to see a stock, a one-way stock, man, oh man, this is like about as sick as you can get. It makes a high with, if you want to see a high with no volume also. It makes a high on a weekly basis with 2 million shares, comes off that with 5 million, comes off it with 9 million. That's when it's starting at $95. It's at $15 right now. And let's see, this stock's going out of business. This is an ABC down. You get A point of 61, a B's at 27. Let's see, 63 to 27, 30. So we get 35. Oh, okay, so you go to $1.34. That's pretty sick. Disaster, big time. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow Industrials right now are up 70. Get the Nasdaq up 14. S&Ps are up 7. Gold's up $18. You get silver up $16. The notes are down 5 ticks. The bonds are off 7. And good old King Dollar is up 50 ticks. We're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year US dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member, FDIC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We have the Dow Industrials right now up 68. You got the Nasdaq up 13. S&Ps are up 6.5. And folks, if you come over to our website at TFNN, what you're going to see right on the front page, I'm doing a Market Insights subscriber event. That subscriber event, folks, is going to be next Thursday night. You can come test drive the Market Insights 1 month absolutely free. And as you do that, you're going to get a copy of my book, The Art of Time in the Trade. You're going to get 30 days of Market Insights. You can check it out what we did, and on Monday it's going to get interesting because we just closed all the trades I had today. So bottom line, all at a good profit. So check it out on the front page of TFNN. We go take a look at the IWM, the small caps, folks. This is what we have inside the small caps. So the IWM today gets down to a price point of $109.54, has light volume, rejects lower price. Then what I suspect we're going to get here, we'll get a bounce somewhere into the 111.72 as the S&Ps and the NDX 100 had done, meaning lighter volume, rejection of price. This is the same setup. More than likely what you're going to see each and every time we've gone down, you've gone down with the volume, you'll bounce with lighter volume. I expect Monday and Tuesday, somehow we're going to get some kind of a small bounce. If you want to see how the hint was here, if you go over to the UK turned around, the UK bounced on light volume. The UK today, the FTSE 100, had traded down to a price point of 6,054, rejected that low. Bottom line, finished at the high of the day. The DAX in Germany didn't do the exact same thing, okay, but it got pretty close. The DAX in Germany traded down to 97.37, closed out at 98.69, and that's important in the aspect of we're in a one-world market. That's how this whole thing shakes out. What we are going to have on Sunday night is that if you go over and we take a look at the Nikkei opened after being closed 3 or 4 days. That also, now this is really wild. We had come down in the Nikkei last week with 2.3 billion shares. Then we came down with 1.7, and then last night you only did 101.5. So Nikkei wants to do a little bounce. That being said, the Hang Seng, different ball game. Whole different ball game. Hang Seng out here, this is what the Hang Seng did. Hang Seng come down 339 points. You had your 20,000, and you had an expansion of volume. So this is what you have. The Hang Seng is saying, guess what? I want to run to 20,058. You know, that's not the end of the world. We'll see how it gets there, meaning do we still have an expansion with volume on the way down? You start wrapping that together, and what I suspect you're going to have, we've got a small bounce. It's going to be a B to a C of a larger ABC structure on the way down. The strength versus the weakness inside the NDX 100 today, this is what it is. The strength is Activision, up 284, or 8%. Dish Networks is up 5.5%, or 243. Cognizant Technologies is up 5%, or $3. And Pfizer Serve is up 3%, or $3. Endo International that's a killer. That's down 40%. Seagate Technology is off 4.5%. Mylan Pharmaceutical is down 4.3%, and Cerner is down 3.4%. We go take a look at the IBB, and what you're going to have with the IBB is this. IBB, oh, this is going to be subtle. This is wild. Okay, so the IBB is down $3.91. They are 255, and your lowest swing point out here, it starts at 253. 253 goes to 240. We put this on a weekly. What you're going to see is the weekly basis right now. You're already into the low bars, and what that sets up, that's going to set up a run after this 240. So the IBB itself is the one that can basically take apart the NASDAQ, you know, because what you do have here, this very well could be an ABC structure on the way down. Your A point on this is 343. Your B is 240. That's a big number. It's what, 343? What did I say? $103. And the C point is 289. So that would really put some heat inside that composite, no doubt about that. Inside the Dow Industrials, what do you have inside the Dow? The strength versus the weakness. The strength out here is Walmart. Walmart's up 1%. American Express is up 0.8. You get Procter & Gamble up 0.8. The losers out here, Merck is the number one. That's down 1%. Apple is down 0.8%. If we do go over to Apple and we take a look at it. Now, for Apple, this is really dangerous. And what it is, folks, is this. You know, Apple the past 2 weeks has traded from $112 down to $92. The high volume low is $92.40. We're at $92.48. You know, you close out here, we close even right where we are, but guess what? This thing can jump the creek. This would be pretty intense. This is really intense, actually. Okay, so picture this. Yeah. And you're pushing in with volume. So what you have is this. Apple alone, more than likely, is going to be the culprit inside the NDX 100 because the next leg down on Apple wants to run to $79.25. What that is the high of January of 2014. That's on your weekly basis. You put this on a monthly basis, I believe that's going to stick out too. Yeah, it is. Same deal. That's sticking out pretty good. And what has already happened is that it's already into the trading range that Apple had established a high in September of 2012. It's already 8 points into that range. So the probability is much higher that we're going to get down to that $80 level. And that's going to be a shock period just for the folks in Apple. There's no doubt about that. Where I think Apple's going is a lot lower than that over the course of the next 2 or 3 years. But that'll take some time, but that'll put shocks just into about everyone. The XLE, let's go to the energies, take a look at the energies, because what the webinar is going to be about next Wednesday night, folks. I'm going to do the indices, meaning the S&P, the Dow, the NASDAQ, what you should be looking for, where you should be getting in, where you should be putting the trades, and I'm going to be doing the XLE, the XLF, and the, let's see, XLE, XLF. There we go. 1 second. Whoops. Sorry. 1 second. 1 second. Okay. So if we take, and the QQQ, right? The QQQ. So if we take a look at the XLE, this is what you have with the XLE. This is a nice setup to sell. Not yet. Okay, but it's getting there, and this is why. So watch this. We get up into 68.78. That 68.78 has everything to do with the November 3rd swing high. This November 3rd swing high, the low of the swing high was $70.08. We had made it up to 68.81. Made it up dramatically lighter volume, rejected it. Now here's the kicker. After the rejection, guess what? You came down with volume. We hit the high with 15.5 million. You come off the high with 24. That's a beauty. That's a huge expansion of volume. Now you bounce again with lighter volume. Bottom line, you let it bounce a little bit more. You sell away, and you're looking for lower price. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're coming right back. Dow is up 64. Nasdaq's up 12. S&Ps are up 5.5. We're going to be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow right now is up 61. You get the Nasdaq up 11. S&Ps are up 5.5. And when you take a look at percentage-wise, what you have is this: you get the Dow up 0.3%, S&Ps up 0.3, Nasdaq up 0.2. Inside the okay, we did the XLE. Let's go to the XLF. So we take a look at the XLF. What you have is that XLF gets to a lower price, has lighter volume, same setup as your Qs, your diamonds, your SPYs. This wants to bounce. I expect what you get here is this. So watch this. Well, let's go through this whole XLF. So the XLF made a high on the 27th of April. That high was $23. You had 46 million shares. Well, the 46 million, folks, is going against 48 million. That's where the gap was. But then it's going against 75 million. It's going against 92 million. 92 million was your downdraft from December 18th. That price point is $23.30. That right there, that's your supply line. I don't see it getting over that. Okay, so we make the high, 46 million shares. You're going into 92 million. You're going into 75 million. Now, watch this. You come off the high. First day you come off the high, you do 60 million. You get a little bit lower, you do 48 million. Now watch the bounce. So 60 and 48, right? You bounce on 35. No buyers. Here's your confirmation. You go down again, and you get an expansion of 37. I know it's small, but guess what? It's expansion. Then what you're going to be looking for, now what you'll be looking for on Monday is that, so today what you got is this. You got 27 million shares. That's lower shares. It is a rejection of price. That means you're going to bounce. Then what you're going to be looking for is you just go to the last day that has volume, and that number there is into the 23.10, 23.40 level. So you get 30 cents there. What you'll be looking for is you're looking for the market to go into it, number one. If you have lighter volume, which I expect you're going to have on Monday, you reject price. That is the aspect of where the bulls are, where the bears are. That would be saying that there's no buyers up there, and this is still trying to set up a larger ABC down. And that's in the short term. On the larger term, all of these indices have this high volume swing point down at the February 8th to February 11th area. And bottom line, that's where a lot of these want to get down and into. The real question is going to be what is the type of leg that they take down. If we go take a look at the indice volume out here today, this is what you're going to have. You're at 712 million on the NYSE. That means we're going to come in at about probably 900 million, which is that's kicking up a bit actually. On the Nasdaq Composite, we're at 1.5 billion, and that also is kicking up. Let's see. No, they get 15 minutes, man. It'll be pretty wild if they unload here in 15 minutes. But bottom line, that's going home over the weekend with larger positions could be a problem. If we go back, we take a look at the platinum, okay? What you have with platinum, folks, is this. Platinum is trading at a price point of 1,078. Oh, okay. Who do I have in the call? I don't see a call.
Pam from Ohio.
Pam?
Pam.
Hi, Pam. How you doing?
All right. I'm doing great. How are you doing?
Good, man. Sorry, I didn't see you. For some reason, my IM's not working. Good, man.
Hey,
Well,
listen,
I
it's
appreciate you
Friday.
calling.
Huh?
I appreciate you calling, man.
Oh, yeah. Oh, yeah. Hey, listen, I got into this Yelp, and I saw that it took quite a leap here today. And by the way, I'm just starting to read your book. I don't know if this is one of those jumps that you talk about in the book or not, but if you could elaborate, if in fact how it applies in your book, that would help me to kind of piece it all together. But I'm just trying to see if there's any legs to this jump that Yelp took today.
Okay, so when you got into it, I mean, are you in a profit here, or you just bought it on the open?
I'm in a profit, more or less. I think it came in around 122, something like that.
Yelp, Y-E-L-P?
Right.
Yeah, so it's at 26.31. It's up 4.5.
Exactly.
Yeah.
Exactly.
Okay. Cool.
Today. Yeah.
Nice.
Yeah.
Okay. So, well, let's take a look. Okay. First, I got to find. Okay. So Yelp's been on a one-way trip. I mean, $80 down to 17.
Really?
Oh well, that's what it's done. That doesn't mean that's what it's going to do. I'm just.
Oh yeah. Oh yeah.
Yeah.
Oh yeah. That's history.
Yeah. That's right. That's right. Okay. So now we're at 26. Your swing point is the 32. You're into 23. That's not bad. Okay, so this is a tough one, man. So this is what the tough one is about this, right? It hasn't, when you know, well, it took out the swing point of 23. Usually, this can get to 29 to 32.
Okay.
You know, what it still doesn't have yet, right, is that we came down the week when this thing got destroyed. Well, it got destroyed quite a bit, but let's say the week of July 31st. It went from 34 to 23 with 62 million, okay? This week, we're only going to do 31. So what you do is that you gauge up the volume against the volume, okay? So especially if you're reading my book, you're going to see what I do. You stay tight first, to see where the supply and demand curve is, and you can move out a little, okay? Now, where you're hearing from me that I think it can get to the 29 to 32 is that you took out the swing today from March, okay?
Yeah.
And your highest swing point, they just like going to swing points. Your highest swing point is 32, and the low of that is 29. So it's like, okay, man, that can do it. Now, the way I trade this is that if you get up to that level and you see volume dying on the vine, well, then you got to make a decision. Do you know what I mean?
Okay.
Because it's going to be going against your benchmark. Is the week, put it on the weekly, is the week of that July 31st.
Okay.
Now, if you see it come into that level next week and it has as much volume, just stay where you are. Because so watch what happens then. Then you're going to then what to do is you take the Fibonacci chapter, right?
Okay.
And what you're going to do is you take it and you say, okay, let me see what this, a 50%. So a 0.382 bounce is 41, okay? This is not, it doesn't mean it will go there, but what I do is this, is that if you have the price and volume, and then it takes out the swing, see, when something's been down this long, that can just be a dead cat bounce. So it's kind of cool, so you get it both ways. That's what happens there. You know what I'm saying? So,
yeah. Okay.
And then let me just see one other thing, because if there's a large shot position, see, you're in good shape here too, because there's a 12.5% shot position in it. So when that happens, now that's not, that's a good size shot position. I mean, people have to buy that back very quickly. So hey, roll with it, man.
Okay.
Okay, man.
Hey, great. Hey, thanks so much. Enjoy your show.
Thanks so much. Have a great one. Have a safe one. We get Jim in Minneapolis. Hey, Jim, what's going on?
Hey, Tom, how are you?
I'm doing great, man. Yourself?
Well, it's 91 degrees here, so we're actually the warmest place in the U.S. right
That's crazy. That's wild, man. 91 degrees. Wow.
Yeah, it's actually 93 up on the edge of Lake Superior at Two Harbors, and the water temperature up there on the lake's like 52 degrees. So.
That is wild. Well, hey, listen, Ted, you're going to have a great weekend, man. That's a beautiful thing.
got the boat in the water. We got action.
Cool. You stay right there, okay? We're coming right back.
Gotcha.
Don't forget, folks, if you do want to test drive my market insights, you can come over to our website at TFNN. You're going to see it set up right on the front page. It's a great deal. You get my book. You get 30 days of market insights absolutely free. Check it out on the front page. We're coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. So we're talking about our man, Mr. Jim from Minneapolis. 90 degrees. It's a beautiful thing. And I believe we're going to talk Heckler, right, Jim?
If you had any observations from their quarter, but obviously the stock's acting well here, and just kind of a general comment about when you think you might see, or how these guys think about M&A activity, either the small guys or the big guys. Is that usually towards the top of the market or along the way?
No, not really. It's along the way, So yeah. That's Heckler Mining, folks. The low is $1.45. The high is $4.36. Strong stock in a huge way. They're going to take in $500 million, $517 million. It's pushing highs with juice. Let me pull this on. This is a really nice setup, man. I mean, it's already eaten through. When I talk about the supply line in the gold and silver stocks, folks, a few of them have eaten through it already, and Heckler's one of them. It ate through April of 2013, going all the way over to May of 2015. So that's saying Heckler's on its way to 692. And it won't be too hard to get to, man, because, it came down so quick. The quarter, I believe let me just pull this up for a second, because their estimate was a penny. They made 2 pennies, right? I mean, what's going to happen, I would say that in not all of them, but, Heckler certainly makes money, period. Whether, things are, silver's very low, but as silver goes higher, these companies make money hand over fist, man, because, silver right now and gold, folks, is at the point that every ounce out of the ground, they're really making money. You know what I mean? And, granted, silver just went from, $13 to $17.50. As to the M&A deals, what happens is this. There's plenty of gold and silver companies that basically are broke. And yeah, they'll pick up some mines. The real question is going to be, how long does that take? What mine do they pick up, number one? And when are they going to be able to get the dirt out of it to market? Do you know what I'm saying?
Right.
But there's definitely, and it all has to do with price again. That's, because what ends up happening, many of these mines, folks, we're coming into where the price is that they can be profitable. The insane thing, Jim, and I know you know this, and some of you folks may or may not know this, the miners themselves are absolutely crazy, okay? My take on them, I've been doing this for a long time. I've had the gold report now for, 15 years. What seems to happen, this is what blows my mind, is that the last run-up, they start buying them, Jim, right? I mean, Newmont started buying them, Barrick started buying them, like when gold was 15 to 1600. And folks, this is the sickest part. They were buying metal in the ground at 1450 and 1500. That's like insane. That'd be, so picture this, we're in the real estate business too. That'd be like me walking into a city saying, okay, every house in the city is worth $1 million. Well, guess what? You have to get it out of the ground first. It's worth nothing, but it could be worth $1 million if I get it out of the ground and say, okay, I'll give you $900,000 for all of them. That's insane. Like maybe I'll give you, $100,000 for all of them. Okay. But that's what the gold companies did last time. Now, the difference this time, there may be a couple of differences because it's so close to 2011 and, with 2016.
Well, and like you said, like on Barrick and Newmont, they didn't hedge away all their upside.
No, they didn't,
so
which is
maybe
great.
Maybe they learned from the last time around.
Well, no, I suspect they did. And what we're talking about, folks, is that Barrick and Newmont were the biggest hedges in the market, and it cost them, each one of them, over $5 billion to close their hedge. Now, they're not hedged out, which is a beautiful thing. Cook and Jim, have a great weekend, have a safe weekend, and stay hot. That's going to be good for your bones, man. It's going to be awesome. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it. Step into it. Take ownership and fly with it. Thanks for being here. Look forward to speaking right back here, 8 o'clock in the morning, Monday morning. Wow! Go get them, folks.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is TFNN.